Good. How are you? It's good to
Good to
see
see you
you.
guys.
Yeah, good morning. Good afternoon, Tom.
Yeah, I just heard, where are you located?
I'm in Alabama, and Raleigh is in Austin, Texas.
Oh, cool. Okay. So we're almost on the same time zone. Um,
Central, right? Everything.
yeah, yeah. We're Chicago based, and I was just listening to the end of Adam's discussion. I am absolutely not worthy. So,
Of course you are.
but I'll take it. Um, I just need 1 second because I just switched, but I'm just deciding if I want to do it on this computer or a different computer so I can squeeze everything onto a single screen. Thanks everybody for coming on board, and let me.
I'll give you just a minute. Let me just go back to our schedule quick and remind
Yeah, if
everybody.
you go back to your schedule, just give me a second to load up our software.
Sure, sure. You just say when.
Okay.
I just want to remind everybody we are here for the next 2 days. Today, of course, there's our schedule for the rest of today, and then we'll be back tomorrow morning. We'll kick off at 9 a.m. again with a packed day of some of the top trading minds in the world. That'll be all day tomorrow, and then all day Thursday will be our final day. And so be sure to check your primer guide. You should have gotten a guide by email when you registered, and we urge you to download that and scan through so you can be prepared for the speakers, get your questions answered, and be here live. Of course, the recordings are going to be available, but there's nothing that you can put up against being in here live and being able to chat with these guys in the moment as we talk.
Let's see, screen share. Where's my screen share option on this?
There's going to be, you just kind of mouse around and you'll have it's where your video and your mic are on that that strip. And,
beautiful.
Okay, so I'm going to mute, and you have a solid hour. Do you see the questions box?
I don't, but here's the thing. We have 3 people actually on right now.
Perfect.
That are, we have 3 people on that are answering questions over at Tastyworks. So I have Scott, Ryan, and Chris on. So they're going to take care of all the questions. That way we don't have to be, that way I can just, fire away and we can just have some fun.
All right. Well, we're here to support you, and we're thankful that you took this hour with us. Y'all give it up for Tom Sosnoff.
Hey, thanks so much, everybody. And
yeah, thank you, Tom.
Yeah, thanks. And this is awesome. I think this is my, this may be my first event. Is this my first event with you guys? I think so. I'm super excited, and I just listened to Adam's piece, and I've worked with Adam for a long time, and it's great. A lot of friendly fire out there, which is awesome. What's exciting about an opportunity to do this for me personally is that I just this is the new audience for us, and when it's a new audience, it's a super lot of fun. So my name is Tom Sosnoff. I have been in this business for, oh man, I used to like celebrating birthdays. I don't like celebrating birthdays anymore, but I'm into decade number 4. For those of you that don't know me at all, I started off as as a market maker on the floor of the SIBO. It lasted about 20 years, 19 or 20 years. I can't remember my start date, but I traded the S&P 100 for most of my career, about 17 years. And I was one of the survivors. I think that's the nice way to put it. Built a market making firm, a prop firm. We managed money. We had about 50 traders. We managed about $500 million in the 90s. So we built a nice little business over the years. And come late 90s, about 1999, 2000, when the market was really, we were in the middle of the dot-com boom, and the market was going crazy. And most of the exchanges were just dipping their feet into the electronic waters, electronic fills. We kind of sensed something was changing. So we decided to do something a little bit different and take all the money that we had made over the last 2 decades, and we decided to build a retail platform. And we weren't exactly sure what we were doing at the time, but we had a couple of different ideas in our head, and ultimately evolved into a platform called Thinkorswim. And so we built Thinkorswim in 1999 and 2000, and we kind of threw a lot of crap at the wall back then. And we decided that we were gonna build a trading platform for individual investors with the best technology. With the best technology, we were going to focus on options, and we were going to be an option boutique. And there was another firm that started around the same time called Options Express. And the two of us kind of changed the game with respect to retail investors trading options. And then obviously we're into futures and stocks and everything else, but our game was much more strategic. And we decided to talk about options as option spreads, option strategies, options as for use as alpha to add incremental wealth, whatever you want to call it. But bottom line was we were strategy based and we wanted to build really cool technology. Well, we did that starting in 1999, 2000. We launched the platform in the end of 2000. And then it was a very popular platform, and we were a public company. And about 9 or 10 years later in 2009, we were bought out by TD Ameritrade. And because we were a public company and there was multiple companies bidding for us at the time. So we lost control and we sold the company, not wanting to, but we were just, it is what it is. And a couple of years later, I decided I liked TD, but I couldn't work for them. So I decided to build a company called Tastytrade. And I wanted to change financial media because what I realized at the time was, this is weird. We built all this really cool technology now and people love it, but I'm not really sure that we ever got out the message of how to really use the technology with some context. Like, what do I do with this amazing brokerage technology? How do I put it into play? Like, how do I use it for strategies? So we decided to build a financial media network, but we weren't going to be like CNBC or Bloomberg or anything like that. We wanted to be free. We wanted to not have any news, not have any real technical analysis, and just focus on math, all quantitative discussions. So starting in end of 2010, 2011, we built Tastytrade. And it's over the last 9 years become the largest digital financial network in the world. There's between 120 and 140,000 people a day watch Tastytrade. And our model at the time was we would just get people introduced into trading and strategies, and then we would recommend different brokerage firms. Well, over time, we decided that the technology wasn't advancing in the industry and the prices were too high for brokerage, for execution fees. So in 2017, we built a platform called Tastyworks, which you're going to see today. And Tastyworks, which then became our revenue model, we decided we could lower fees. And the first thing we did was lower rates by about 80%. We were the first firm to knock fees down to, zero for closing and just a fee to open. And we decided we'll save individual investors, hundreds of millions of dollars. In addition to that, we built technology that was super fast. So what you're about to see today is the Tastyworks platform, which is the only retail platform that's built on high frequency middleware. You always hear about high frequency trading and high frequency market making. And we've been on both sides of the business. We partnered with some high frequency trading firms in Chicago to build the middleware piece of the software. And it's very unique to the retail business. It's super fast. It's between 20 times and 50 times faster than any other retail platform out there. So, and does that make a difference when you're with your fills? Not really. I mean, it's all just a blink of an eye. But the difference is that you're not being disadvantaged by anybody on the street, nobody. And so it's very slick, very simple technology that is designed to be essentially one page, always out in front of you. And it's built for people that like to use options, futures, options on futures, and of course stocks. In fact, in 2 weeks from yesterday, we are launching a new futures exchange. It's Chicago-based. It's called the Small Exchange. We are the lead investor, but there's lots of other big market-making firms that are invested in it. And it's going to be the first futures exchange that's going to compete with the CME and the IC in almost 3 or 4 decades. And it's kind of been a dream project of mine for a long time. So keep your eyes open for it. In 2 weeks, you'll be able to trade on the Small Exchange stocks, a stock index, a crude oil index, a gold index, a dollar index, and a bond index. And we'll have 5 futures initially. And I think you'll like it because the products are the same size as a ETF, like a $50 or $60 ETF. And the overnight requirements are only a few $100s. The beautiful thing about it is it's very capital efficient. And in the future of trading, for everybody that's listening today, it's all going to be about capital efficiency. The whole business is going to be about capital efficiency. So getting back to Tastyworks, and sorry to jump off on the small exchange, but getting back to Tastyworks, we launched Tastyworks in 2017. It's currently the fastest growing platform, I think, in the world. 80% of our business is 75 to 80% is options, and about 20 to 22% is futures, broken down part futures options. The balance is stock trading, and stock trading on the platform is completely free. So it doesn't cost you anything. And option trading is minimal. It comes out to the equivalent of like 50 cents a contract, and futures trading is like $1.25. So everything is, our pricing is very straightforward. Everybody pays the same rates. There's no special deals. And just like Adam said, the platform is very fast and it's very stable. We've had zero downtime in 3.5 years. It's almost unheard of. So it's the same team that originally built Thinkorswim with me. We kind of put the band back together, but it's just a newer, faster, bigger, platform with much bigger pipes and unthrottled quote speed and everything else like that. The beautiful thing about Tasty is that we do it in conjunction with our network. So we have one of the only financial networks that, by the way, is completely free. And the archives are free, and we don't sell anything. We just want you to use our brokerage firm. And one of the other nice things about Tasty is we don't believe in different levels of like suitability requirements. So anybody that has the capital can make any trade that they want. So if you want to trade, for example, futures and you have a small account, go right ahead. You want to trade micro futures or small exchange futures, go right ahead. If you want to trade options or options on futures, go right ahead. If you want to trade naked options in an IRA account, which most firms tell you can't do, you can do with us, no problem at all. So, I mean, the capital requirement's a little different for naked options in an IRA account, but you can trade naked calls and puts in an IRA account. You can trade naked futures options in there. You can trade futures in there. We don't limit the strategy you can do, and we don't limit the type of account, and we don't limit you based on how much money you have. So we are pure retail, meaning we are pure consumer advocates. Everything we do is to support the retail investor. We don't have any professional traders. We don't take any institutional accounts. We don't accept any firm accounts. We are 100% customers on our platform. So people trade small, they trade often, and we made the platform very conducive to individuals just, doing whatever it is, whatever you want to do. And it's a real simple, small, straightforward platform. When I say small, it's loaded, but we keep it very simple. So what you're looking at right now, except I've detached a right-hand gutter, which has a lot of details in it, but with respect to like your order book and things like that. So I've detached it to make the screen bigger. But the cool thing about what you're looking at right now is this is essentially the platform. And let me give you a couple of, I'll give you a couple little, this is just a firm account, so I'll give you a couple little sneak peeks into some of the stuff we do. So let's for the time being, let me move some of these Zoom constraints off to the side. Perfect. Okay, so one of the things about the Tastyworks platform is it's designed around a watch list philosophy. Now, we've learned a lot of this stuff over 20 years. Just remember, this is the same group. That the Tasty Trade and Tastyworks group is the same group that in the retail environment right now, about 45% of every single order that's routed to every single exchange is done through technology that we built. So I know that's going to sound crazy, but that's what we've been doing for the last 20 years. So when you look at the technology out there that routes orders, and you look at some of the professional technology we built and some of the retail and some of the high frequency technology, about 45% of every single order that's routed is through technology that we've designed, built, and released. So we're pretty good at that stuff. But one of the neat things about this platform, for example, let's just say you wanted to trade S&P futures, which I have on the first line up here. All you have to do if you want to trade S&P futures, just click on the ask. If you want to buy them, click on the bid. If you want to sell them, that's the entire platform. And what happens here is it pops up into the top line here on a trade page. And if you want to sell them, just click on the bid again if you wanted to, or if you wanted to buy them, just click on the offer. Anywhere on the platform, if you click on the bid, you sell something. If you click on the ask, you buy something. And so, for example, if I wanted to just let's say I wanted to sell the S&Ps here and I wanted to offer it a one tick higher at 88. I just double click on review and send, and I'm working this order, and no, I'm actually filled. It just went 88 bid. And that's how simple, and these are real trades. Everything I do with you right now is real. So that's how simple this platform is to use. Let's say you didn't want to trade futures, and you were all of a sudden you decided, hey, you know what? I'm going to look at some stock. So I'm going to take a sneak peek here, and I'm going to look at. I'll just pick a stock that's moving around a lot today. Like I'll pick a stock like Netflix, for example. It's a $472 stock. It's up $1.79 today. Let's just say, and I'll change my quantity here. Let's just say, you know what? I think this stock's a little overpriced here. So I'm going to raise my offer up a little bit to, let's say, $429.88 and put an offer in. I'm filled. And as you can see, this is, and I raised my offer that time. This is all high frequency. It's all fast. It's all real. And the neat thing is, I traded futures and I traded stocks from the exact same interface. Well, let's say, for example, I just wanted to trade options in Netflix, just as something to do. So I'll open up June options, and I don't need all these strikes. So let me open up fewer strikes. And when I open up an option page here, what's kind of neat about this is, and the way we design this is where this line is in the middle of the page, that's the at the money strike. So what that line means is that's where the underlying is currently trading. And again, we kept this very simple, very visual for you. But let's say I'm a little bearish because I just sold some stock in Netflix. Let's just say, hey, you know what? I'm going to sell an out of the money call in here. So the stock's trading at 430. Let's just say I wanted to sell a 470 call. So all you do is click on the 470 calls. Now, that's pretty standard practice throughout the whole industry. But let's say instead of just selling on the 470 calls, I decide, hey, you know what? I want to sell a slightly bigger call. So I'm going to sell the 465 calls. So you just drag it one. Or make it the 460 calls. So you just drag it one more. There's no changing prices down below. There's no changing. You don't have to do anything with like click or anything manual. You just put your cursor on whatever the strike is and you just drag it higher or lower. But now let's say, you know what? Instead of just selling this call, I want to sell this call spread. So then you just buy whatever other strike you want by just clicking on the offer. And now I have a call spread in there. Now let's say I have this call spread and I'm like, hey, you know what? Here, I'll close this up so you don't even have to see this. So I have this call spread, and let's say, you know what? I want to actually take a little bit more risk in this, so I'll just widen out one. Or let's say, hey, you know what? I want to take a little bit less risk, so I'll just narrow it down to one strike wide. So everything on the platform is completely flexible. Like it doesn't know any recognized strategies for the purpose of order routing, like a lot of platforms do. You have to do something that's recognized. This one doesn't care what you do. You can customize whatever you want to do. So if you want to sell this call spread, you can go right ahead. But let's just say you're looking at this call spread and you go, you know what? I think Netflix is going up higher, so I want to turn this short call spread into, I don't know, a Jade Lizard. So then you just sell a put down below, right here. I'm selling a put at the 400 level. One short put with a short call spread is called a Jade Lizard. It's a kind of a trade that it's trying to take advantage of a little bit of skew, but it's a bullish trade. If I delete this short put, this is a bearish trade. If I add a short put to that bearish trade, this is a bullish trade. If I then turn around and buy this strike put below it, I now have an iron condor. And again, the platform is super flexible. If you want to see what the iron condor is, you have this iron condor here set up at $5.75. So it's a little bit rich for an iron condor. But if you wanted to go over here and see what the probability of profit on this iron condor is, it's 41%. It shows you right here. If you want to see how much extrinsic premium you're collecting based on the number of contracts you have, it's right here. If you want to see what the probability of reaching 50% of max profit or $2.90 is, it's listed right here. If you want to see what the delta on this trade is, which is essentially flat, it's listed right here. So you don't even have to go to a different page to see all your Greeks, including your theta, including your max profit, your max loss, and everything else, including the buying power required for this trade, and everything else about this trade. And it's all right in front of you. And to take it a step further, if you said, hey, you know what? This is kind of really this is really cool seeing all this stuff in front of you and being able to adjust this. Can I make this a skewed iron condor? Meaning, can I sell a 10-point wide put spread and a 5-point wide call spread? Of course you can. There you go. 10-point wide put spread, 5-point wide call spread. Yeah, but can I sell 1 put spread and 2 call spreads? And the answer is, of course you can. Anything you want to do in any form that's customizable in any way, shape, or form, you can do it on this platform. And again, I didn't even check. I didn't click on anything. I didn't have to readjust by deleting the strikes or changing like the makeup of the trade. I just dragged the strikes. That's all I did. You want to do a different month, you just click on a plus or minus arrow. And there's more to this though. This is just a start. This is what we call a table mode. And let's say, for example, I'll widen these back out so it's a 10-point wide iron condor on both sides. Let's say you wanted to see a visual of this. This is not an analysis page. We have that as well. This is not an active trading page. We have that as well. This is just a curve mode. And this will show you your entire order that you just set up, or your position, whichever you want to see. And this will allow you to give a different view where you make money where the green is in the middle. This up here is kind of, it's a distribution curve. It's kind of an asymmetrical distribution curve. And again, sometimes people like to see what they're setting up as a trade inside of a distribution curve. So you kind of know. These lines, these dotted lines here, are the 1 standard deviation move on the downside and the 1 standard deviation move on the upside. And so you can see where the 1 standard deviation is inside of the distribution curve, and you can also see where the 2 standard deviation is, and that way it'll give you an idea of where kind of your outside risk is. But inside of this is a skewed iron condor, or an unbalanced iron condor with a 10-point wide put spread, and this one has actually 10-point wide put spread, 10-point wide call spread. And if you wanted to make it a wider put spread, you just drag this tile. So you can do it so many different ways. You can drag the tiles, or you can see it, red is where you would lose money, green is where you make money. Here's where you see where you are inside of a distribution curve, and lose money up here, make money in this big middle area, lose money out here. A classic iron condor. Some people like to trade only off the curve mode. Again, we also have an active mode here, which is for trading futures and or stocks. We also have an analysis page, which allows you to adjust dates, volatility, price, and you can play around and you can just decide, if this strategy is good for you or it's not good for you. I'm going to go back to the table mode for a second, and I'm going to tighten up this iron condor just a little bit, just so you can see it a little better on the screen. And again, this is a classic $10 wide iron condor. But let's say you're a little bit unfamiliar with, you're just not that familiar with all these kind of different strategies and things like that. Well, we even made it simple in the sense that you can go up here to the top of the page, and you can click. There's a bunch of different spreads that are already built into the system: vertical strangles, straddles, iron condors, covered calls, jade lizards, butterflies, calendars, or stock. And you can go back up here, and we have iron condor selected, and just go, and there's your short iron condor, and then drag it to wherever you want. So the platform will also set everything up for you and make it super simple, and then you can just decide based on whatever probability of profit you're looking for, or whatever kind of delta you want on the trade. Okay, and so all that's kind of just different stuff to look at. Remember earlier we sold the S&P, so we'll just put a bid in right here, and we bought it back. So that's what we call $25 the hard way in the world of trading. And also, let's go back to Netflix for a second because we're working on this trade. And remember, we sold 100 shares of Netflix just a couple seconds ago. We'll just buy that back also just for a little scalp for 20 or 30 cents, just to show you kind of how the platform is conducive to trading, and how simple it is, and how I never leave any of these pages. And if you said, hey Tom, yeah, but I need more than this, well, there is actually a lot more. There's a watch list built into this. There's actually the Tasty Trade Network. So if you want to see what's going on right now on Tasty Trade, you can see we have a couple of our talent, Nikki and Mike are right now on the screen, and they're doing a discussion on inversion. And you can see everything that I did this morning with Tony and Vanetta and everything else. And all of this is free, and you can watch it, obviously live on the platform. Also, there's a charting package built right into the platform, and you can see anything you want with 100 different indicators and basically everything built into pretty normalized charting platform. We also do something that nobody else does, which is we will show you that every trade that everybody who works for us made today. So we are completely transparent. So you can see, like, for example, Katie just bought an Iron Condor in Amazon. Liz and Jenny just did a Pinterest earnings play for tonight, an ATV earnings play, and a Disney earnings play. And I was trading this morning before this started, and you can see the trades I made: a spider trade, an MPC trade, a bunch of ES scalps, and Tony just traded some Shake Shack, and Christy just traded some Grubhub. And you can see the strategy they used, and you can see what time we did it. And we only show you real-time trades. And so we are the only firm where, and again, remember, I'm the co-CEO with Christy. We're showing you all of our trades and all of our on-air talent and showing you every single thing that we do. We're not showing you returns. We're not suggesting this is a great trade or anything like that. We're just showing that we do it. We're the only firm where everybody at the firm trades. And our technology, our rate schedule, everything kind of reflects that. And it's all built into this super simple platform where, if you noticed, I haven't gone to a different screen. I've just been messing around. And obviously we have a position tab in here too, but I'm not going to go through, all of my positions with you, but there's probably like 80 or 90 different underlyings in there, and, in tons and tons and tons of different positions. But you're getting at least a little, a feel for the platform, a little bit of a lay of the land. So some of the things that, we're in the middle of earnings season right now. And one of the things that I love to do is I love to, and I talk all day long about markets because I love it. And I'm a junkie. This is all for love of the game. And I trade all day, and I do as much teaching and as much, engaging with our customers as I possibly can. I answer all my own emails. We've been doing this for 20 years now. We have, on Tastyworks, the platform we're looking at right now, we have 150,000 customers or something right around there. I don't know the exact number. And like I said, we're one of the most active platforms in the world. And hopefully by the end of the session today, you can see why. And you can also see how in touch we are with our customers. I mean, we understand this business. We sold our last business to a company that I'm not sure the CEO ever logged on to our software, and they paid $750 million for it. So, it's a little strange when it's hard to name a CEO in the world of finance. And in fact, I challenge anybody to name a CEO of any other online brokerage firm. Yet we're out there, myself and Scott, he's even on this chat right now answering questions. And, there's not a lot of people that do what we do. We are very engaged and very close to our customers. And we work very closely with our marketing partners, like Adam Mesh and his group that was just on before. I mean, they're awesome. They're one of our favorite, marketing teams, and we love the way they hold people's hands, and they engage people and work people, get people excited about trading. And we do the same thing, but we just do it kind of in our own way. But let's talk a little bit about some of the stuff that's going on here, that's potentially going here tonight, because we're in the middle of earnings season. And there's a couple of stocks that have earnings tonight that are kind of interesting to me. One of the stocks is, let's call it Disney. Disney's actually down 50 cents today, and it's a stock that's been kind of rocked recently a little bit. You can see here that it's the last couple of days they've hit it pretty good. Bounced back a little bit yesterday, was up a little bit this morning, down a little bit now. It's kind of, they're waiting to see what happens earnings wise. I've made a couple of small trades in Disney. One of the things that our platform does, let me just move this over to the side. Okay. One of the things that our platform does is it tells you a couple things. First, a little purple message pops up showing that there's earnings. And here the date, May 5th. So you can see it's today. And here we show you the number of days to expiration. But we also show more than that. We show you the implied at the money volatility right in this line. And we also show you the expected move between now and May expiration, which is $7.50 higher or lower. Now, if you wanted to see the expected move between here and the end of the week, you could look at the weekly options, and it's $6.25. So there's a $6.25 expected move that is based on purely on, that's just math, by the way, and it's based purely on implied volatility. Implied volatility is a measure of expected move. And so the weekly expected move by Friday is $6.25. The month expiration in May is $7.55. Now up here, we show something that nobody else shows, which is the IV rank. This is a level from 0 to 100 at where this particular 67% ranks. So this 67% rank is at the 40 level. So between 0 and 100, with 100 being the highest and best or most expensive volatility, and 0 being the lowest, this Disney volatility is currently trading at 40. That's context around this implied volatility number. That way, when you see implied volatility on this platform, you'll know. Like, let's say, for example, you wanted to trade another stock that has earnings this afternoon, which is Pinterest. The implied volatility rank in Pinterest is 69. That's even higher. Let's say you wanted to trade ATVI. And that's Activision, which also has earnings today. The implied volatility rank in there is almost 60. So with the implied volatility rank in Activision at 60, and this is a stock that's had just a monster move, actually pretty much to new highs, because a lot of people are staying home, I guess, and watching, or at least that's the perception of it. This becomes a potentially interesting trade for earnings tonight. And I have nothing on in there, so let's take a look at some of the potential earnings trades. Now, I'm going to look at regular expirations only because I like to. The 10-day expected move is $5, which is funny that in Activision, the 10-day expected move is $5. In Disney, the 10-day expected move is $7.50. That gives you really good context. But here, they're saying that the IV rank is a little bit higher than it is in Disney. So, okay, I'm going to stick to Activision. I'm going to open up May options. I have no axe to grind in here. I'm a contrarian by nature. But again, I have no axe to grind. The stock's at all-time highs. And look how tight these markets are. You know, we look for liquidity, but look at these markets, 98, 99. That's pretty damn good. Let's take a look at the put markets. And there's pretty good volume. There's 5 million shares have traded. It's definitely a good trading vehicle. In a stock like Activision, which I'm guessing is probably, you know, I'm a contrarian, so I like to fade every kind of move. So what I'm going to do in Activision is just have a little fun. I'm going to sell the 73 put, which is $5 higher than we're currently trading, and I'm going to sell the 64 call, which is $64. I'm going to sell the 64 put, which is $4 lower than where we're trading, and I'm going to sell the 73 call, which is $5 higher than where we're trading, and they're about the same price. So if you're wondering how's that possible, that's what we call skew. That's called pricing skew. That means that the market believes that the perception of risk is to the upside. That means the market is pricing the calls in ATVI higher than the puts because the market perceives that the velocity of risk, like which way is it going to move faster, the market perceives it's to the upside. So what I'm going to do in this case is I'm actually going to change my quantities, and I'm going to show you how to do a ratio spread in here. So I'm going to do what we call a 2-by-3 ratio spread. Now this is getting a little bit complex, but I just want to show you the capability of this platform. So instead of doing the strangle 1-to-1, I'm going to do the equivalent of 2 puts and 3 calls simultaneously in one order at a single price. And you can see I just clicked on both of those strikes. Now this is a 2-by-3 ratio, but I'm going to change the quantity. So I'm going to do it 6-by-9 because that's more of a probably a price. Now you can see the market here is actually pretty tight. So I'm going to move it 1 penny off mid price. And here I'm going to show you something interesting. So I moved it 1 penny off mid price. So I would try to get a fill, but we're the only firm. So I put that order in at 489. Now we are one of the only firms that is on, oops, sorry. Let me pull that back for a second. pull this back for 1 second. We are one of the only firms that works on all high frequency middleware, like I showed you before. Now, here, I'm just bringing up this separate window because this would be sitting on a different screen or anything else. This is my right-hand gutter. And here's the position. I just did it in real time, 6x9. And this is where I got filled at 495. I put that order in at 489. Okay, I just repeat, I put that order in at 489. I got filled on this 6x9 or 2x3 ratio spread, 6 cents higher, because we're indifferent. We route this order to, we think we have one of the best, and again, I just said we think we have one of the best order routing mechanisms. The way that we've written our code, we don't use any of the old legacy systems that all the other firms use. We use high frequency, very advanced order routing code. And what you'll see here is the current mark is 490. I did this at 495. It's a credit, so right now it's like a nickel winner. And here you can see my fills in here. And we actually filled it at 494. I'm sorry, I take that back. They must be parsed at 494, 495. But you can see right here. And on a 489 limit, we filled it at 495. And this is what we call the right-hand gutter, which depending on the kind of platform you're on and depending on your screen size, you can have this up all the time. It'll show your working orders. It'll show you all your filled orders over the course of the day. It'll show you your entire position. If you have a position on in a stock like ATVI, like I do, it will show you quote details of ATVI. Like it'll show you, for example, open, close, high, low. It'll show you when there's a dividend. If it has one, it'll show you when earnings are coming out. It'll show you the volume. It'll also show you where we rate it. We do our own ratings on liquidity. So we have ATVI as a 3-star or 3.5-star liquidity, and which 4-star being the best. And there's also a day chart here. So if you wanted to, for any reason, just keep the small chart up on the side. You can do that all the time as well. And if you said, you know what, I don't need the small chart up on the side, but I really want to watch Tasty Trade, you can watch that up here on the side if you want to. And again, you can watch all your activity. You can see all your filled orders, and you can use this watch list and you can detach it. You can leave it on a separate screen. You can set up alerts. You can do anything like that. And it's always there for you. I'll minimize this again. And now we have an earnings trade on in ATVI. We did a 2x3 ratio spread, and we put that trade on because I wanted to be short a few extra calls than puts because I'm a contrarian, but I wanted to also try to take a little bit of advantage of the skew and also fade the move. That's it. I mean, I don't have any rhyme or reason. I want it to be inside of the expected move, and that's where I am. And that's an example of how to do an earnings trade. So let's go back for a second and let's take a look at Disney. They also have earnings today. The stock's down 19 cents right now. It's a little less attractive than ATVI because the IB rank's a little lower, but I'm going to go to May options. And in May options in Disney, I'm going to take a look at I'm going to look at a strangling here. I'm going to sell a put below, and their puts I'm selling the $1.32 put. And above, I'm going to sell a call above. I'm going to sell the 110 calls, which are the same price, basically, $1.30. And mid price is 264. I'm going to go down to 263. I'm probably going to have to go to 262 to fill this because in Disney, you just kind of know like what stocks you have to give up a little bit extra in. And so I want to show you something. So when you have a working order on Tastyworks and I don't need to see this. Hang on 1 second. Let me go back to this for a second. I'll close this window up. And here's my Disney position right now. And if I want to just change this order, I just hit replace order and I'll just lower the price one and I'll send it. And I'm filled. And that's how simple it goes. You hear the ding, you go, I love the ding, and you're done. And that's a simple kind of Disney order. Let's say you didn't want to take that much risk in Disney and you wanted to do something simple, but you wanted to test out the earnings. And you said, you know what, I want to test out earnings, but I don't want to take as much risk as Tom just took. So I'm going to do an iron condor in there. I'm going to sell the same 110 put and the 110 call and the 94 put. But in this case, I'm going to do it as an iron condor, 4-point wide put spread because there's no strikes in between there. Let me just do this for a second so it looks like a perfectly even iron condor, because otherwise I'll confuse everybody. And 110, 114, which is a perfectly even iron condor. Mid price is $1.22. I'm going to lower my price to 119 because I think that's what it's going to take to fill it. and I got a fill at 119. Notice how on the Iron Condor, depending on the underlying, like Disney usually have to move a penny or two around mid-price. Iron Condor is maybe 2 or 3 cents just because it's earnings time. If I did it in June, it'd probably only be 2 cents. And in ATVI, because the markets were tighter than there, it's only 1 cent. So if I did try to do an earnings trade in Pinterest right now, it would probably be 2 or 3 cents. And that's how crazy simple and all-encompassing this platform is from one simple view. Again, I didn't do anything crazy here. Let me walk you through this again, because Disney is a pretty popular stock. So let's just say I went out to June and I looked at this and you're like, I don't really like playing May because I don't want to play earnings, but I wouldn't mind doing something in June. So I'll go out to June. I'll say, okay, I have no problem June. I'll do a cheap strangle in June. I'll sell the 80 puts for $1, and I'm going to go up, see, I could sell the 120 calls or the 115 calls. I'm going to sell the 120 calls. And I'm going to collect just around $2 for this. That the mid price is 202. The actual bid is 198. I'm going to try to put this in at 201, and then we'll see. And this is just, again, looking at the statistics down here, because this is what's important about Tasty. Probability of profit, making 1 penny at expiration, 78%. This is a 5 lot, so that's why the extrinsic is this number. It's $2, 200 times 5 is 1,000. That's where I see the extrinsic 1,000. P50, which we're the only platform that has, because we created it, is a Monte Carlo simulation of a few thousand of this same trade to give you an idea of what is the statistical chances of making $1 on the trade. And it happens right here to be about 96%. That's nice to know. What is the delta on this trade? That means how many Disney shares am I long or short? So if I did this 5 times, it's the equivalent of being short 22 shares of Disney. Okay, I can handle that. So here we go. We're out the order. Not filled. It's okay. I can leave it in, obviously, and maybe I'll get filled in a little bit. Or I can just go and replace order, lower it by a penny. Oops, I'm sorry. I was already filled before I was able to do it. So I was filled at 201. See, sometimes it takes a couple seconds for a fill, and sometimes when I'm doing software demos, I'm impatient, and I just, I'll change the price, but we got filled before I changed the price. And then if I go back and just look at, my Disney positions, they're all in here. And if I just look at my last fill, these are my last 2 Disney fills. This one was an earnings trade. This one was a June trade. And here's just a bunch of different positions we have on in Disney playing earnings for tonight and things like that. The thing about Tastyworks is it's designed for retail investors to have lots of positions on so that you can create a truly diversified portfolio. So let me explain what that means. A diversified, in a normal kind of, sales pitchy, advisory world, diversified means, you're long, you own Disney, and then you own some other stock like Disney, or some other stock in some other field like Apple or something like that. In our world, that's not what diversified means. In our world, it means you have lots of different strategies on, reduces your overall portfolio risk by 30%. You have lots of different non-correlated underlyings on, reduces portfolio risk by up to 30%. You have different durations on, reduces portfolio risk by about 10%, and you have different volatilities on, reduces portfolio risk by about 10%. What our goal is to use our research. We're a think tank. Use our research to reduce the standard deviation of risk in your overall portfolio so that it gets you to the point where you trade small, trade often, carry lots of different strategies, lots of different underlyings, lots of different durations, lots of different volatilities. You learn the business. You can articulate everything that you're doing. You can explain why you made money. You understand why you didn't make money. You don't rely on a single person other than for engagement. Everything's on you. You own the trade. You own the success. You own all the responsibility for the losses. You own all the responsibility for your successes. You then become a spokesperson, engaged, a teacher, and you become a decision maker. You build up this powerful, in the world of trading, one of the most important takeaways is this powerful know-how about the speed at which you make decisions. The most successful people in the world are the fastest decision makers. The only way to build up your processing speed, meaning the processing speed inside your brain in order to make decisions that I know of, is the intellectual challenge of trading. So one of the coolest things to do is to, in order to actually build up, that skill set and improve the speed at which you assess risk, improve the speed at which you assess probabilities, real probabilities, not bullshit probabilities like somebody thinks that there's a support or resistance line here, or somebody thinks that there's a reason it's going to stop here fundamentally. None of that crap. This is all just math. Hey, you know what? The expected move is $7. Or I'm going to show you another little trick in a couple seconds about intraday expected move. And so all that stuff comes with the experience of kind of trade small, trade often. Now, let's say we go to a stock that doesn't have earnings right here. Let's go to Apple for a quick second. Here's a little kind of trick. So we're going to look at May volatility in Apple. Now, Apple just had its earnings. The reason this is a blue D up here is because it has a dividend coming out on May 8th. That won't make any difference, but for people, we just show it on the platform. And again, looking at June expiration, looking at May expiration, you can see the number of days. If I wanted to see how much Apple is expected to move on any given day, all I have to look at is the implied volatility on the right-hand side of the page. Now, here's a little trick about trading. If you see a 19% implied volatility, that means that there's about a 1% high to low expected move. If you see a 35%, like we have in Apple today, that's just under a 2% expected high to low move. Now, because 19% is 1% and 38% would be 2%. Apple has just about a 35 or 36% implied volatility in June. So 2% of a $300 stock is what? It's a little under 2%, and because I said it's just under 2%, is just under $6. How much has Apple moved today? $6. Now, that's real math. That's Black-Scholes at its finest. You take the most liquid underlying, or one of the most liquid underlyings available, Apple. It trades like an index. You look at the implied volatility, the expected one-day move was just under 2%, and the actual move in Apple today was just under 2%. How's that for math working? That is the power of what we call quantitative or statistical or math-driven strategic finance. We are all about strategic finance, and we do it all for nothing at Tasty Trade, and we let you execute it all at Tastyworks. And you can get all the other information you want, engagement from anybody else that's out there. There's a million good people that provide lots of great information. What we do is something a little different than everybody else. We just drive home the math. Now, if you wanted to, for example, let's take a look at something else. Let's look at another underlying that is liquid. And let's take a look today at, let me just think about, let me look at what stocks I have up here that I don't want to go too expensive on stocks. Let's take a look at Microsoft, okay? That's the next stock on my list. I'm picking out all the trillion-dollar companies. So Microsoft has an implied volatility implied volatility almost the same as Apple, right? Remember, Apple was 35.3. Microsoft, coincidentally, there's no magic to this, is 35.6. It's virtually the same as Apple. They have the same volatility. So let's just take 2% of this. The stock is $182. 2% would be a $3.60, just about a $3.60 move, high to low. How much is Microsoft up today? $3.82. It's actually scary, but when you think about bookmakers and you think about like Las Vegas bookmakers making a line on a football game, on a Raider game or something like that, their lines are incredibly accurate, and they work with very small notional value and virtually and again, very small notional value flows through betting pipes, and they're just good at what they do. Imagine market making firms making markets in Apple and Microsoft that are 100 to 1,000 times better than the casinos making a line on the Raiders game, because the casino has a 10% edge that's the VIG, that's the bid-ask differential. The market makers have a half a penny. So literally on a $30,000 trade, they have 50 cents to $1 in edge, max, the total, not times 100 or anything, max 50 cents to $1. So they have to be spot on. So what happens in those cases? You see this incredibly accurate skill of market makers. And so when you wonder, how do they know? They know. And it's just amazing how it works. So what does that mean to individual investors like you and me? Because I'm just a retail investor just like you. What it means is we can trust the markets to be efficient. We can trust the prices to do price discovery for us. And what we have to focus on is understanding the strategies and understanding what you're allowed to do and understanding capital efficiency. So if you're out there and you're on a legacy platform and you're using very inefficient technology, or you're using technology that doesn't allow you to do the things that our technology, and talk about, I mean, this is just the tip of the iceberg on this technology. I mean, like, for example, if you wanted to roll your position, just to show you in Disney, if I wanted to take I'll use Microsoft here. If I wanted to take my Microsoft position and roll it from June to July, all you do is just click on quick roll and boom, you are now rolling your position to July in one click, same strike, and you can adjust it to anything you want. This is the simplest platform in the world for adjusting and rolling positions. And I don't want to get too far off too far off the deep end just to get things confusing. But what you're seeing in front of you right now is it's not legacy technology. This is next generation technology. And if you're not on this stuff, you're just disadvantaging yourself. Anyway, I heard a beep go off. Is that my signal?
No, Tom, you have 9 minutes. That's going to happen every time somebody joins the situation. So our next speaker just signed in. Sorry about that. You can go to the top of the hour.
Okay. Hopefully this is going great for you.
Fantastic. We love it. Keep going.
Just so you know, I'm not looking, so everybody knows, I am not looking at the chats, and I haven't looked at them once. And we have a team at Tastyworks. We have Ryan, Chris, and Scott on answering questions. They're all registered. Scott is the CEO of Tastyworks. So I'm the CEO of Tasty Trade. He's the CEO of Tastyworks. Scott and I have been partners since the late 80s, 1987, 1988. We don't even remember anymore. But we built a bunch of businesses together. Nobody knows more about brokerage than Scott, I promise you, in the whole freaking world. So if you have any questions, feel free, ask him anything about Tastyworks. We'd love to have all of you on board. We have amazing, if you're not a Tastyworks customer right now and you open an account with us, we have a nice little giveaway right now. You get 100 shares of stock, and it's done through a wheel. So it could be a stock anywhere from it averages about $200, but it could be anywhere up to $500. So who knows, of total value. So you get that when you open an account at Tastyworks right now. And that's our current promotion. Last quarter, we gave away a Tesla, and that was kind of a fun promotion. But we'd love to have you on board. We'd love you to ask any questions. You can email support@Tastyworks when this is over. You can chat with the guys right now and ask them anything you want. Or you can email me, Tom@Tastytrade, and I answer all my own emails. Happy to answer anything you'd like, Tom@Tastytrade. Or you can email support@Tastytrade or support@Tastyworks, any of our companies. We own 6 different companies. We also own another brokerage firm called Doe, which is like a Robinhood competitor. So if you have somebody that's in college or a millennial that wants to get on a platform like that doesn't want to deal with Robinhood technology or Robinhood kind of red tape, Doe is an amazing platform, and it's going to be, if they're Uber, we're going to be Lyft. So you can check out the Doe platform. Don't forget, we are launching the small exchange 2 weeks from yesterday. So on May 18th, there's going to be a new futures exchange, and you will be able to trade it through a lot of different firms. But if you're at TD or Schwab, they are not connected to it. E-Trade is in the process of connecting. Interactive Brokers is in the process of connecting. But to make sure you're connected, we would love to have you over at Tastyworks. They'll be ready to go on day one. And so, again, enjoy our stuff. We also have a magazine that you can get. It is called Luckbox Magazine. I don't know if you can see a copy of it here, if you're seeing my picture or not, but we have a paper version. That one you have to pay for because, you know, it gets sent to your house. But the digital version is totally free, and you can go to luckboxmagazine.com, or you can go to Tasty Trade and sign up for it. And like I said, it's an amazing magazine. It was voted best new magazine in America, and it's completely free. Part of it's trading, part of it's not. We cover tons of different topics. We own it outright, so we'll give you the digital version, and you can just enjoy it. And it's a pretty slick digital version, so you can check out all that stuff. Also, after the close today at 3 o'clock, we're doing a demo day on Tastyworks, so you can check out the Tastyworks demo given by one of our guys at 3 o'clock today on the Tasty Trade Network. And also, we are 7 days a week now. We do research specials live on Saturday morning at 10, and Tony and I do a Sunday night show for a half hour from Chicago when the futures market's open. And then we do 10 minutes from, we have an office in Australia. We do 10 minutes from Australia to get a view of what's going on around the world. And remember, Tasty Trade is open is live from 7 in the morning till 3 in the afternoon with about 30 different hosts. And we would love to see you, come by and check it out. And we'll support any questions or any topics that you want to go over with us. Man, we love this stuff. And so, and like I said earlier, we're the consummate junkies. And we trade earnings, we trade expirations, we trade all products. We are product indifferent. So it doesn't matter to me whether it's a futures trade like we showed you earlier on the platform today, whether it's a stock trade like we showed you earlier on the platform, like it was option trades. I bought and sold some stock, bought and sold a future, didn't sell. Opened 2 Disney trades and 1 ATVI trade, just so you can see a little bit about earnings trades today. And, all I can tell you is that I know there's a lot of people on. I haven't even seen the total number, but it looks like 700 plus, which is amazing. And so a huge kudos, out to everybody that helped to, set this up. And I am, very honored for the beautiful introduction. And I'm also, I think I just really appreciate the opportunity and to talk to everybody, to kind of give my version of the story. I hope I can do this until they roll me out into the dumpster, as I've said a few hundred times. And, we're here, we're consumer advocates. We work with you. There's no firm like what we do. And we just compete with the big boys. We love putting big financial institutions in their place. So come out and support the little guys. And we like to say, it's time to try a better broker. So that's all I've got. And I thank you so much for spending the last hour with me. That was amazing. And hopefully hopefully you guys got something out of it. And if not, just keep firing away, keep testing us, keep testing the waters, and keep coming back for more. Raleigh, I'll turn it over to you.
Well, thank you very much, Tom. That was an amazing, amazing presentation.
I'm so excited. Raleigh and I are so excited that you came today. How amazing.
I can't believe, I'm so happy you guys asked me, because I don't even know about half this stuff. And when you ask me, it's like, we do something different than most people. So it's like, we're like a change of pace. And I also think that it's so much fun talking to new people and getting all the questions and working with you guys. Hopefully, you'll have me back, and I love doing it, and I'll support you guys any way I can.
Tom, that's fantastic. And I know you haven't had a chance to watch the questions or the chats, but overwhelmingly, people just really appreciate and respect your commitment to the industry and to the retail trader. It comes out loud and clear.